Interest rates are going through the roof. Interest rates have almost doubled since a year ago, guys. This is ridiculous. This isn't something that we didn't see coming. If you've been watching my videos, you know that I've been saying that the Fed is going to continue to raise interest rates. And with that being said, interest rates will continue to go up. Now, a lot of people in my comment section have been saying,
Orlando, yeah, the Fed is going to raise rates, but it won't really have the effect that you think it will have.
Well, we're currently sitting at 6.55%, guys, for a 30-year fixed mortgage. We have for FHA loan, we're at 5.99, and for a VA loan, we're at 6%, guys. 5.99 for FH loan, and for a regular conventional loan nationwide, it is 6.5%. Bananas, right? It's getting tough, guys. Listen, this is the reason why you have to watch these videos to keep updated. Because once again, let's explain how this works.
Like and subscribe.
When the interest rates go up, values go down. So we're starting to see all these price cuts from $20,000, $30,000, $10,000 now. It seems like is a normal everyday occurrence when you go on Zillow to see a price cut of $10,000. We want the big bucks now, right? We want 20, 30, 40, 50 percent price cuts. And that is starting to happen now, guys. But let's jump into this information right now. It says U.S. mortgage rates rise, hitting highest level since end of June. Rates increased to 5.66%, climbing for a second week in a row. Economists say cool down in price growth likely to continue. Now, 5.66% is the rate that they're using for an FHA loan, but the national rate for a conventional loan is 6.5%. Crazy. Mortgage rates in the U.S. climbed for the second week in a move that threatens to further cool the housing market. The average for a 30-year loan rose to 5.66%, the highest since the end of June, Freddie Mac said in a statement. The surge in mortgage rates this year has led to a sudden sales slowdown. Well, no! Well, duh, right, guys? Well, of course, there will be a slowdown in sales. Why is there a slowdown in sales? Because we say it all the time here. 2% increase in interest rates is a $200,000 decrease in your buying power. So every 1% is $100,000. Now, what does that mean for you? That means that if a person could have bought a house for $500,000, now they will only get pre-approved for a $300,000 home. Now let's drop that down to someone who can only afford a $300,000 home. Now they can only afford a $100,000 home. Now, who wants to do that? That probably is not even in the same neighborhood. That's probably not in the same school district or anything. More than likely, you're just priced out and you cannot afford a home now.
No, God, please, no.
So the best thing for you to do is to sit out and not buy a home. Maybe you're going to rent, maybe you're going to stay with relatives, whatever it is, you stay on the sidelines, saving your money until prices come down to an affordability level that you can get into the market. With fewer interested buyers in the market, sellers are holding back. In the 4 weeks through August 21st, new listings dropped 15% from the same period earlier, the biggest annual decline since the start of the pandemic. And that is because sellers are understanding that this is not 6 months ago. This right now, what's going on is not a year ago where you could sell someone a home for $50, $60, $80, $100, even in some instances, $200,000 over asking. Those days are gone.
Those days are long gone.
And sellers understand that, but some sellers are upset and they're saying,
You know what? If I can't make that much money, then I'm not selling my house at all. I'm going to take it off the market. I want to make what my friends made in 6 months ago or a year ago.
But unfortunately, sellers, and I'm not saying that's every seller, I'm saying that are some sellers that had that FOMO that just really is looking back 6 months ago and saying,
Oh man, I could have sold it for $100,000. Why didn't I do it?
because people were buying it then. And with that being said, they're saying, I'm just going to hold on to it. I'm not going to sell it. I'm not going to put it on the market because maybe just maybe, homes will get back to that price. Sellers, look, not against you at all, not against you, but I'm just here to let you know that's gone. There's no way that prices are gonna be back where they are. And if that's okay, if you don't wanna put your home on the market, but there will be individuals who will want to put their home on the market. And that is the reason why I'm telling you guys to continue to look every day on Zillow, Redfin, wherever you go to look at homes and make sure to know what's going on in your local market, guys. It is so important to know what's going on in your local market so you can have your finger on the pulse of what's going on in your housing market so you can purchase that home that you're looking for before anyone else. And that's the only way, because we all know homes magically just won't appear on your doorstep, in your email box. You have to go get it, guys. The market renewed perception of a more aggressive monetary policy stance has driven mortgage rates up and almost double what they were a year ago. The increase in mortgage rates is coming at a particular vulnerable time in the housing market as sellers are recalibrating their prices due to lower purchase demand, likely resulting in continued price growth deceleration. Now, guys, listen, we've been talking about this. The higher that their interest rates go, prices go down. Why? Because, like they just said in the article, decreasing demand will bring the price down. There aren't as many individuals that can qualify for loans at these high interest rates. So prices will go down. And that's just the way it is. I know. We have the detractors that continue to tell us that prices will never go down. You know, people were saying that 6 months ago.
Awkward. So awkward.
Go back and look at my videos in my comment section and you will see people saying,
Orlando, there's no way prices are gonna go down. Prices will continue to go up 20, 30, 40% year over year for the next 4 years. You're wrong about that.
And then I would say, I don't know how that works when you have interest rates continue to go up, and as they continue to go up, then people's purchase power is decreased. So how is that gonna work when you have that and then the demand drops down? And when the demand drops down, it is just economics, supply and demand. But supply and demand doesn't work in the housing industry. You know, I get it. That's what people want to tell me, but we all know they're wrong when it comes to that. And here's the thing, you're seeing the proof is in the pudding, guys. You can go onto Zillow, Redfin, any other place you go look at homes, and you will see a large amount of price decreases, price reductions. And where do you think that's coming from? That's not coming from anywhere else than the rates being increased. And rates will continue to increase because how many more increases do we have from the Fed? We got 2. What is the Fed saying right now? They're saying we're going to be extremely aggressive until we get inflation down to where we want it. And where does the Fed want inflation? They want inflation at 3%, guys. And where are we now? We're at 8.5, probably higher because we're just using the CPI report. But if we probably looked at the overall inflation, we're probably in the double digits.
Come on, man!
I know it's crazy. But let's just use this CPI report. We're at 8.5 right now, and we have way further to go. Dude, does it look like we're gonna get to that 9% that I was predicting? I don't know. Looks like we're right around the corner from that. At the current 30-year average, a borrower with a $300,000 mortgage would pay $1,734 a month, about $451 more than they did last year. Look at this rate chart. We see this rate chart December, and we can all agree, guys, looking at this chart, that the only reason that prices are going down is because of the rate increase. And with that being said, a lot of people aren't talking about this, guys. Not only does it cost more to finance a home and you're losing money as far as buying power, but everything that's associated with the home costs more. Appliances, taxes, insurance, all of these things cost double now, guys. Did you hear what I just said? Double. And that's no joke. That is no fabrication. That is no exaggeration. That is the truth. Everything costs double. What you would have paid for insurance a year ago, 2 years ago, it's double. What your tax bill is, what you would have normally paid for that 2 years ago, it's double. And here's the funny thing about that, guys, that is so big is your income. Your income hasn't went up, but everything is double, including the mortgage and so on. So where is the money gonna come from? So if you were normally paying, let's say your debt to income on a house was 30%. Now, if you add in all the expenses, now it's gonna be 60. Now that's where the real trouble comes in. Now all of a sudden you're over your head when it comes to a property, to the home, your dream home that you wanted. Now you're over your head because you didn't realize you were gonna be 60% debt to income. You only thought 30% that the mortgage company underwrote you for. And that is the reason why I'm telling people, hold up, be patient, look at what's going on in this market. If you have to buy a house, you have to buy a house. But if you can sit on the sidelines and save your money, look and see what's happening with this housing market, wait till we get into a recession, wait till prices drop a little bit further, make sure they're affordable for you, make sure that your job is stable, then go ahead and jump into the market and get your home. Even having all of this information in this next video, it will help you learn even more about this crazy housing market and what you need to do to prepare yourself to buy your next home. So go ahead and make sure that you watch this next video.